Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav for today's session of JForex Indicators Explained. We are going to consider pattern recognition which is quite interesting as here we not only look at the trend and possible reversal but also sometimes many false signals are generated. So this formation is helpful where we have the initial move in one direction and then suddenly reversal happens after continuation for some time. So we will be considering this formation which first takes the traders for a ride and then reverses course. So let us now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. And there was this new feature released, interesting feature we have here. This hot list added, and this list provide you the names of the buzzing stocks, the stocks which have gained substantially in the recent hours. So whatever the trading session you have, the stocks which are seeing a substantial decline or substantial rise will be listed here. So this is the feature you can utilize if you are a trader in equity segment and stocks in particular. Now coming back to the pattern recognition, let us go to the Euro USD because Euro USD is the most commonly traded instrument in the financial market. And here we have this development in which Euro has seemed to have reversed all the gains which were there in the initial hours of today's session, and now it is trading at the lowest point of the day, or you can even say lowest point of the week. The dollar has gained substantially, but not against the JPY. JPY is still trading quite strong, and even the GBP, as we had talked about, the GBP's relative strength in the correlation analysis. So the GBP seems to be holding well, and if we look at the CHF is also quite strong. Now let us get back to what we do best in this session, that is to study the pattern recognition. So let me now add this Hikkake formation. This is a Japanese term, yeah, which is going to be helpful for figuring out the opportunities where after initial moves in a opposite side we are getting a further confirmation. Now let me take the example. So if this formation is taken into consideration, the bullish high KK formation, bullish high KK pattern. So what has happened here? We have this harami candle formation in initial hours. This is the requirement that the first two candles should be of harami formation. If you are aware of that, that's well and good, or else you will have to refer to the earlier session. Basically, the second candle, its body needs to be contained within the body of the first candle. So that's how the harami formation shapes up. Then it should continue to decline for some time in next couple of candles, and eventually all those earlier decline should evaporate and we should see final climb which gets us closer to or even above this high of the second candle. So that's what we are seeing in this particular formation, and as a result of that we have this bullish IKK formation. Now in this instance we have this bearish IKK formation. In the initial hours we had this substantial move on the higher side, then price continued in the same side for next couple of hours, but eventually all those prior gains evaporated and we had this substantial decline, so resulting in this high KK formation. So this is a multi-candle formation. You will have to observe the charts for like 4 to 5 candles or even sometimes up to 7 candles, and then you can be sure about the price moves. So the underlying logic of this formation is kind of simple. It tries to eliminate the false signals generated in the course of volatile price movement, because many times we see that the initial move happens but suddenly the reversal takes place, and all those traders who had traded in the first lot expecting the trend to go that way then have to bail out, and because of that many stop losses are also hit and we get this strong move in the opposite side. So that is the logic of this formation. So if we look at these multiple instances where this high KK formation has taken shape, you will see that not all the times the trades are going to end up in profit. So then the second principle comes into play. You have to look for the entry or exit points which are designed in such a way that if you happen to be on the losing side on that particular trade, you shouldn't be losing too much money. But if you happen to be right about that trade, then you should be making a lot of money. And one more thing, that when the things are not really going anywhere, on those kind of scenarios, in those kind of conditions, we will see these trade signals being generated multiple times, as is the case this time. Here in this consolidation phase, the market moves are really shallow. It is not really going anywhere in either direction. It is trading in a narrow range, and as a result of that, these multiple high KK formations are shaping up. So you will also have to apply additional filtering mechanisms like figuring out the average volatility, what is the range which has prevailed over last couple of hours, and maybe you can take a larger time frame and you can compare what is the range for this high KK formation, what kind of volatility has been observed in last couple of candles, and you can compare that volatility with the volatility prevailing earlier in the day or maybe for whole day. You can then compare and see if the volatility is in line or more than the prevailing volatility or not. And if it is less, I think it is better to simply pack your bags or simply sit on the sidelines rather than getting involved, because we as a trader, we want volatility. If there is not much of a volatility, then that makes our job of making money that much difficult. So it is very annoying to simply sit staring at the screen and nothing happens. The moves are too shallow. So to avoid that kind of possibility, it is always better to trade when there is increased volatility in the market. So this formation, which is a formation which tries to actually falsify the false signals generated in course of price volatility, and that makes it much more reliable. But I should add in the same breath that it is going to be higher probability setup, but not 100% setup. No setup is 100% foolproof. So same thing applies here. So you will always have to take care and try to minimize the losses if you happen to be on the wrong side of the trade. That is the first and the most important requirement with the formation or with any other formation. Now let us see what we can do in terms of editing. If we consider this edit indicator option, here we have this input editing panel, but there is nothing to edit as we can't really play around with the input candles. Those are fixed. The formation is derived independently of the our input criterion, so we have not really been provided with any input editing option here. Output, all you can do is go for different color combination if you feel like. Maybe you can opt for brighter shades like this bright yellow. You can go for even shading of whole of the candle or simply bracketing. I think this looks much more prettier. Always it is personal choice. If you feel that this is looking too prominent, maybe you can lower the transparency factor. So in that case, you will have this kind of shading for this bracket. Then comes the advanced editing option, and here you get this choice of recalculate on new candle only. This is I don't really think it is going to cast much of an impact, but still you can try out this combination as well, and highlight the time period zone, whatever is your candle period which has been utilized for these particular formation will be highlighted. So you will get to know exactly how many candles have been considered for this particular formation, as this is a formation which has variable numbers of candle coming from 4 to 5 to or even going towards 7 depending on how things have shaped up. And then we get this editing option again. There is no option of customizing the calculation further, so this has been disabled. We can't customize the calculation. Now coming to this show indicator on all the periods. Suppose if you want to use it on the hourly time frame, then well you can opt in for it. But if you want it available on all the formations, all the time frame, then you can go for that as well. So here you have this option of opting for the different time frames, 5 minutes as well as hourly. Now if we disable this and go for show on all the periods here, now in this case it is not showing up. Yeah, it is available here. Let me change it to say 15 minutes. So on the 15-minute time frame it's not really available, you can see. Alright, so now again we are back at hourly. So if you add multiple indicators, multiple formations of different types, and at the same time you don't really want the chart to look too cluttered, so in that case you can go for these options. You can have this formation on particular time frame of your choice, while at the same time you might want other indicators to be available on different time frames, so you can do that as well. Now I am going to opt in again for show indicator on all the periods. All right. So with this, we are done with the editing options provided on the platform. So I hope you got the point and the message across. So you should try it out, see how things shape up, how things perform in real time scenario. So do the observation, and based on your own observation, maybe you can draw a fresh assessment whether to rely on this or whether to simply go for further additional filtering mechanism. So on that choice, you can make a better and informed trading choice, prediction, projections, I would say. So thank you all for joining in. Have a fabulous time ahead, a fabulous day, a profitable day ahead. See you next time around with a new formation to deal with, to figure out how we can optimize our chances, increase our profit, and reduce our losses. So that's all for today's session of JForex Indicators.